Hey everyone, welcome to the third episode of our Contra investing series where we analyze businesses that have corrected a lot and identify if the correction creates an opportunity or not. In today's video, we'll deep dive into one of the worst performer of 2025. It is Praj Industries. After generating nearly 20 times return from the COVID lows, Praj Industry share price has nosedived by more than 60%. Interestingly, domestic institutions that consistently increased stake in the company between December 22 till December 24 and public holding that kept on reducing. However, in the last 3 quarters, DIs have reduced exposure and public holding has increased. The big question is, what has happened in 2025 that resulted in more than 60% correction? And why are DIs reducing exposure in spite of sharp correction? So as usual, we'll put Praj Industry in our 4-point contra investing framework and identify if it qualifies as contra bet or not. But before we begin, just one point I want to mention. While it may be a 15-16 minute video for you, it takes hours and hours of research for me to read the annual report, investor presentation, con calls and whatnot. And the most difficult part is to break down all the information in a 15-16 minute video that even a layman can understand. Trust me, it's not easy. I hope you would appreciate the effort I put in. Alright, let's get started. So first question of our contra investing framework is the business fundamentally strong? And there we check business model, management quality and balance sheet. Let's first understand Praj business model. So Praj Industries is India's most established biofuel and industrial engineering company. It started in 1983 to provide ethanol technology to sugar mills. At that time, ethanol blending was not even the government priority. But Praj was betting on the idea that biofuels would one day become important for India's energy security. The real inflection came when Indian government started pushing ethanol blending in petrol. There was massive demand from sugar companies to set up ethanol plants, and Praj became the leading technology provider for first generation ethanol plants to produce ethanol from sugarcane. However, Praj Industry is not just limited to setting up ethanol plants. It's very important to have a clarity on its business. So Praj is a highly R&D focused company and today it has got 4 business divisions. First is of course bioenergy that include first generation ethanol technology to convert sugarcane molasses into ethanol. However, now it has also expanded into 2G technology that convert agri waste into ethanol. Currently 62% of company revenue comes from biofuel vertical that mainly include orders to set up ethanol plants. Then its bioenergy division also includes CBG, that is compressed biogas. CBG offers a renewable and sustainable alternative to conventional CNG gas. Then company has also expanded into SAF, that is sustainable aviation fuel, where they are building the world's first integrated ethanol to jet facility. Management in the latest con call mentioned that we have a real demo facility where on one side when you put ethanol, we can consistently run the plant to get the sustainable aviation fuel that is certified for usage in the airplanes. Further, management said Praj not just has the technology but also the engineering capability that will help the customers to construct a commercial sized plant for SAF. As per Ministry of Civil Aviation, India is targeting SAF blending of 1% by 2027, scaling to 5% by 2030. Praj's second vertical is high purity solution that include ultra pure water system used in pharma, biotech, nutraceutical and personal care industry. Its contribution is 11% in H1 FY26. Its third vertical is engineering, where it manufactures high-end precision engineering equipment for complex industrial processes across multiple sectors like oil and gas, petrochemical, and so on. This business has strong export presence, plus it's a high-margin business due to engineering complexity. Within this segment, Praj designs and builds Turkey brewing plants and process system for beer companies, then craft and microbreweries and non-alcoholic beverages. Then another segment within engineering is industrial wastewater treatment, where Praj provides solution for treating complex industrial wastewater like zero liquid discharge system. Engineering vertical contribution is around 27% as of H1 FY26. Apart from these 3 verticals, Praj is also extensively working on new innovations like developing next generation bio-based chemicals and materials like bioplastic, biobitumen and biochemicals. The focus here is to replace petroleum-based chemical and create sustainable materials. This is Praj's future growth engine where companies targeting high margin, high-tech markets beyond ethanol and compressed biogas. One of the strongest validation of their R&D is they have a portfolio of more than 400 patents. Next, if you look at the management quality, its founder and chairman is Dr. Pramod Chaudhary. He's deeply passionate about bioeconomy and environment and committed to develop clean and green technologies. He's an alumnus of IIT Bombay batch of 1971 and an alumnus of Harvard Business School. You can visit Praj's website to get detail about his awards and recognition. Then Mr. Ashish Gaikwad is the MD of the company. He's an alumnus of BIT Pilani, again a very reputed institution, and brings over 34 years of experience in industrial automation. Before joining Praj earlier this year, he was the MD of Honeywell Automation. Overall, Praj management is top-notch with decades of experience. Next, if you look at the balance sheet, Praj has very low debt to equity ratio. Then its cash from operation has been good historically, but FY25 is weak due to multiple challenges. Company's cash conversion cycle is also very fast and working capital days are also very efficient. ROCE has been high in the past but has fallen in FY25. Overall, the fundamentals of Praj industry look solid. Now let's look at the second criteria. So if you look at Praj earning growth trajectory, it exploded during 2021 to 23 phase and that resulted in exponential returns. However, in last 2 quarters, company's margins have collapsed and trailing 12-month earning growth has fallen by 62% and that resulted in more than 60% correction in Praj share price. The question is, what factors resulted in sharp decline in company's earning growth? And more importantly, are these issues temporary or permanent? So one of the biggest reasons behind Praj share price correction is the sudden slowdown in ethanol demand due to oversupply. Over the last few years, the government has pushed the industry towards E20 ethanol blending target to mix 20% ethanol in petrol, and that was the biggest growth driver for Praj. But this target has been achieved way before the time. As a result, new greenfield ethanol plant orders have slowed down, existing projects are facing delay, and funding for new projects is taking longer to close. At the same time, several issues have emerged where people over social media have raised concern about the long-term impact of E20 on vehicle engine, corrosion, and fuel efficiency. On that, Ministry of Petroleum and Natural Gas has laid out a detailed response that you can go through. Indian Ministry has clarified that some lobbies with vested interest are actively attempting to create confusion and derail India's ethanol revolution. However, such efforts will not succeed. In fact, Brazil has run on E27 for years without any issue. They further said E20 blending results in reduction of greenhouse gas emission, improve air quality, enhance engine performance, and has already led to over 1.4 lakh crore in foreign exchange saving. Indian Ministry is very clear that country will now gradually scale towards E25, E27 and E30 in a phased, calibrated manner with support of BIS standards and fiscal incentives. I also did some research on impact of ethanol on vehicle and found that big OEMs like Maruti, Mahindra, Honda, Hyundai, they all have compliant their cars with E20 fuel. For instance, in April 23, Maruti Suzuki announced that its entire petrol lineup is now E20 compliant. Then all Honda cars manufactured in India since 2019 have been E20 material compatible. For cars manufactured after October 23, Hyundai has claimed compliance with E20. Mahindra and Mahindra said while vehicles produced after 1st April 25 are specially calibrated for E20 to ensure optimal performance, earlier produced vehicle, though completely safe to drive, could see a minor variation in either acceleration or fuel efficiency depending on driving behavior. So broadly speaking, cars manufactured after April 23 are completely E20 compliant. Although car manufactured before April 23 can safely use E20 fuel, but there can be impact on fuel efficiency. Also, some people say that ethanol can corrode the fuel lines, injector and tanks. So today a large chunk of Praj business is linked to government regulation on ethanol blending. But government is very clear on increasing the ethanol blending to 30% by 2030. Whenever the E20 target becomes official, it will boost Praj growth. Until then, the uncertainty will remain on earning growth. The challenge is, today Indian cars are not compliant with E30 fuel. So that will have some negative impact on existing car. And considering the outrage among public, it won't be easy for government to implement E30 immediately. Again, government is saying that they would do it in a calibrated manner. Now, the second blow to Praj came from the US side because of the tariff and broader global slowdown in clean energy investment. So many US ethanol and low carbon fuel projects were put on hold. Customers delayed their final investment decisions and the order pipeline moved slower than expected. Praj was expecting a big jump from these projects, so the slowdown directly affected market sentiment. As a result, Praj GenX facility is running at a very low utilization rate. Since the fixed costs are continued, its GenX facility has reported heavy losses. And this has dragged the consolidated EBITDA sharply. But management has already said that GenX orders are coming back. Let's see how it goes. Overall, 4 factors impacted Praj margins and earning growth badly. First, ethanol demand plateaued after E20. Second, slowdown in US clean energy capex. Third is customer funding delays. And fourth, GenX underutilization hitting the margin. In my view, these issues are temporary. The only question is, how long will these problems last? For the share price to recover, markets need to see the improvement in quarterly number. And markets should regain confidence that worse is behind. Until the quarterly performance starts showing early sign of improvement, the stock may remain in a downward or let's say in a consolidated trajectory. Management in the latest con call has mentioned that recovery is going to be there, but it is going to be slow. Now let's look at the third criteria. So next big question is the long-term demand story intact? So first of all, biofuels are extremely crucial for cleaner energy. Especially if you look at India, we import 85% of our crude. So even a $10 rise in crude oil hurts the economy massively. When we blend ethanol with petrol or use CBG as fuel, we replace a part of crude oil. Even 1% increase in blending saves India thousands of crore every year. Second, biofuel helps in improving energy security. The more fuel we produce within India, the less we depend on unstable market globally. Third, the world is committed towards clean energy and it cannot be done only with EVs. So biofuel would definitely play an important role in achieving the target. And finally, ethanol and CBG provide big boost to farmers and rural economy because farmer provides the raw material for energy production. Plus, it reduces the stubble burning. So it helps the environment as well. So as the demand for biofuel increases, Praj would be a direct beneficiary. In fact, there are multiple growth drivers apart from just the ethanol side. For instance, sustainable aviation fuel can be one of Praj's biggest long-term catalysts. Globally, airlines must cut emission, there's no choice. That's why SAF mandates are becoming stronger every year. Praj already has a proven A to J, that is alcohol to jet technology. As SAF moves from pilot scale to commercial scale, Praj can benefit massively. This will be a multi-year opportunity. Then compressed biogas is another strong structural theme where Praj has an early mover advantage. OMCs, that is oil marketing companies, are signing long-term purchase agreement. Yes, the rollout is slow, but directionally this segment will grow steadily. Then engineering and water business today contribute 27% in company's business. And going forward, there will be sustainable demand for zero liquid discharge and industrial wastewater solution. And finally, Praj Bioprism platform that produces biobitumen, bioplastic, renewable chemicals should start contributing in future earning growth. Simply because world is slowly moving away from petrochemical and looking for bio-based alternative. Praj is already developing commercial scale solution in biobitumen and renewable chemicals. This may not move the needle today, but it builds a very strong future pipeline. Now let's look at the final criteria. Now let's talk about the most important question, that is valuation. If you look at Praj's stock price today versus its peak, the stock has corrected more than 60%. So clearly the excess optimism is gone. But the real question is, has the valuation become reasonable? So first of all, in spite of the sharp correction, Praj P ratio is very high. But that is misleading because earnings have collapsed due to temporary issue and P ratio looks optically expensive. Here better metric would be price to sale. So today its price to sale is below 2, which is way below its median price to sale of 3 and in fact at par with the levels of December 20 and April 23 lows. On 10-year time frame also, price to sale is now slightly below the median level. So clearly the valuations have reset. The froth has gone. From here, the downside looks limited. That said, the stock won't see a major re-rating until the quarterly numbers start improving. Now if you look at institutions, they were very upbeat on Praj. DIs were consistently increasing stake and public holding was reducing. But DIs have reduced stake in last 2 quarters due to all the problems we have discussed. The key here is to watch when would DIs start showing confidence again in Praj. Hopefully when the earning growth comes back. From technical perspective, stock is clearly in a downward trend and trading below its 200 DMA and 50 DMA. So maybe it's worth waiting to get some sort of consolidation and recovery in share price. Overall, if we conclude, Praj Industries is a fundamentally strong company operating in one of the most important sectors of the future. The business model is solid, management is top-notch, the balance sheet is clean, and long-term demand story for biofuel, sustainable aviation fuel, compressed biogas, and industrial engineering remains intact. Yes, earnings have collapsed and stock has corrected more than 60%. But these issues like ethanol oversupply, clean energy slowdown in the US, customer funding delay, and Gen-X underutilization, they are temporary cyclical headwind, not structural damage to the business. The company itself is very clear that recovery will happen, but it will be gradual. And with this correction, valuations have reset meaningfully. The premium is gone and expectations are more realistic, and I think that the downside from current valuation looks limited. But for the stock to bottom out and start a proper reversal, we need to see growth in quarterly numbers. If the earnings remain weak, sentiments will stay weak. So from Contra investing perspective, Praj fits the criteria, but timing here is crucial. If you are a long-term investor with patience, this is a business worth tracking closely. And once early signs of recovery start appearing in the quarterly number, Praj has the potential to bounce back strongly. As far as smart money is concerned, institutions were consistently increasing stake in Praj in the past, but they have been a net seller in last few quarters. But that said, once the company starts showing recovery, I expect smart money to again increase stake. So that would be again important to watch. So this is it for this video. If you find it useful, do share it within your circle. If you have any question, let me know in the comment. I'll see you in the next video. And there are many more videos in the pipeline for Contra investing series, so stay tuned.